Hey everybody, it's your boy Wayne here to give you a weekly wheel and other options update. IWM, the iShares Russell 2000 ETF, has really been my go-to for the last several months when it comes to selling options, both cash secured puts as well as covered calls. Today, I'm going to give you a play-by-play on a recent transaction where within less than 48 hours, I was assigned 100 shares, turned around and sold a covered call, and then was assigned those 100 shares on that covered call. It's going to be pretty cool. Let's go ahead and get right into it. And things for me began in October of 2022 when I started writing cash secured puts against IWM. You can see here for 2022, I had a total of 23 transactions. I was never assigned IWM. I was always able to either close out early or roll close and then later close out that transaction early. So in 2022, I had a total of 23 contracts and I received $961 in premium. Now in early November, I made a decision that I wanted to buy 100 shares of IWM and not just sell cash secured puts, but now turn around and sell covered calls. So you guys can see back on November 4th, I bought 100 shares and my cost basis was $175.95. After buying those 100 shares, I began to sell covered calls pretty much on a regular basis. Now, one thing that I want to point out that I like about IWM is they have contracts that you can write 3 times a week. Most covered calls or cash secured puts, you can only write either 1 time a week or 1 time a month. IWM, a little bit different. They have contracts that expire Monday, Wednesday, and Friday. So for 2022, I wrote a total of 25 contracts and I earned $1,080. And I continue to write covered calls against those 100 shares that I bought in November all the way through 2023 up until I was assigned. So go ahead and take a look here all the way down to line item 187. That was the last transaction before I was assigned on those 100 shares. Remember, my cost basis was $175.95. So even when those 100 shares were called away, I made the difference between $175.95 in which I paid per share for the 100 shares, and ultimately the strike price was $177. So in total for 2023, for the 20 contracts that I wrote, I received $945. And so one of the things that we talk about when running a wheel strategy is if you are assigned on those shares or turn right around and begin to sell cash secured puts. And so you guys can see throughout 2023, I have also been writing cash secured puts as well as other types of options against IWM. And you can see here so far with the 9 transactions, I have earned $646. Now go ahead and take a look here at line item 59. This is going to be the transaction we're going to highlight for the majority of today's video. On June 26th, I sold a cash secured put that was set to expire the same day. And essentially, I entered a contract in which I would agree to buy 100 shares if the share price of IWM reached 181 or lower. And for entering that 1-day contract, I received $45. So guess what happened? I certainly didn't see it coming. I really thought that I was going to be earning $45 free and clear, no worries whatsoever. And it turns out the share price of IWM did fall below the 181 strike price. Specifically, at the close of business, price at expiration was $180.75, which means I was forced to buy 100 shares of IWM at the agreed upon strike price of $181. But that's okay, because even if we're assigned those 100 shares, what do we do next? That's right, we turn around and we sell a covered call. Now, it's really interesting because in a matter of just a couple of hours, even though the share price of IWM fell below the 181 mark, in just a couple of hours during the post-market trading session, IWM actually went up about $1 and some change. And so on the 27th, the day after I was assigned those 100 shares, the share price of IWM had actually gone above the 181 share price in which I own IWM. So I was able to sell a covered call. My strike price was $183, which means if those shares are called away, I immediately am going to incur a $200 capital gain, because remember, my cost basis is $181 for those 100 shares. And in doing so, For that 2-day contract, essentially I was paid $55 in premium. So guess what happened at the close of June 28th? You guessed it, my 100 shares are going to be called away. That's right, IWM at the close of business on the 28th reached $184.30, which means those 100 shares are going to be called away at the agreed upon strike price of $183. So let's go ahead and give you a play-by-play. On the 26th of June, I sold a cash secured put, essentially agreeing to buy 100 shares of IWM if the share price reached 181. And in doing so, I was paid $45 in premium. Guess what? Those shares are assigned to me because the share price of IWM does go below 181. On June 27th, I now own 100 shares of IWM. I turn right around and I sell a covered call. In doing so, I receive $55 in premium, but my strike price is not 181, not 182, but 183. And that's a good thing because if those shares are called away, I immediately am going to get $200 in capital appreciation. And that's what happens. At the conclusion of the 28th, when the contract expires, the share price of IWM has gone above 183. So I am forced to relinquish those shares. So all in all, I made 45 plus 55 plus the $200 capital appreciation. That's a total of $300 in less than 48 hours. And what's probably even more exciting, if we add up the premium that I've earned in selling cash secured puts in 2022, 2023, if we add the covered call premium that I received in 2022, 2023, I have made a total in premium alone of $3,687. IWM is definitely my go-to stock when it comes to generating premium of significance on a regular basis. Hey, I hope you guys got some good information. We'll see you on the next one.